Whose responsibility is the loan application? Is it the borrower's responsibility to get it right? Or is it the loan officer's responsibility to make sure it's correct? Today, we're going to check it out. Hey everybody, this is Rich Hanlin with Mortgage Ballers, and today I've got an interesting topic. I'm going to keep it simple, but this keeps coming up over the last 2.5 years. I have seen more fraud in the last 2.5 years. Obviously, rates go up. People try and pull fast ones to get better rates and or get into homes, doing everything they can. A lot of people have figured out that, hey, it's a federal crime to lie on a loan application, but they really don't care because the follow-up to that is pretty weak. The only person that's going to get burnt is the lender, broker, loan officer type people, because we're in the business every single day and we will get our licenses taken away if we are found to have participated in that fraud. So interesting thing, this keeps coming up and there's certain red flags. I just wanted to reach out and have a conversation. You know, I've had 2 top 10 mortgage brokerages in the United States. I currently have Expert Home Lending. I got 519 loan officers, and I am constantly having audits that I have to go over as the responsible broker. So let's talk about this for a minute. Another audit came in, and it's again the same thing over and over. And people say, "Gosh, your people, don't they know?" And I'm like, "Yeah, I have sent out multiple contacts on this particular topic." And so it's my job to keep reminding people, obviously. People have been slow. Not everybody wants to read their emails. Not everybody wants to talk about compliance. And that's okay. I'm not mad at anybody. I just want to share this conversation, as a lot of people, maybe you don't care about the applications. I've talked to people and they said, you know what? I don't touch an application. They send it in electronically and that's what I use. I won't mess with anything. And I think, well, that's crazy. I don't know what your thought process is on a 1003. My thought process is a 1003 is a piece of scratch paper. The upfront application is a piece of scratch paper. And that's where we start to make decisions about what we're looking at. That's where, if you're going to ask the borrower to send it in electronically, it is, of my opinion, with my 34 years of experience, it is 100% the loan officer's fiduciary responsibility to double check and ask the right questions and to verify the information by which they have been given via that application. You know, we have this newer set of loan officers, and there's nothing wrong with it. Times change. Everything used to be done by paper. Everything used to be done face to face. We'd fill out the application, and in those conversations, we could catch red flags. But if you're allowing your borrower to just submit an application, you check their income, you check their credit, hey, this looks like a loan, and then you upload it to a lender, have you really done your due diligence, fiduciary responsibility, to double check that application? And the answer is many times no. So let's talk about it for a minute. So this is kind of what I was talking about with my company today. You know, I put, please double check your 1003s before submitting them to the lenders. Borrowers can fill out applications, we pull credit, we calculate income, and boom, we import it to the lender. One small problem. Do you review your loan applications? Do you specifically confirm with your borrowers, hey, I see that you marked that you're married. I see you marked that you're unmarried. Hey, by chance, do you work for a family member? By chance, would you be considered self-employed? Hey, it looks like you intend to occupy the property. Hey, I'm looking at your income, and based on past income, it looks like you just got a really large increase right before we're going to make an offer on this contract. These are red flags. These are questions that are going to be looked at on every application. And if they're done incorrectly, whose fault is it? The borrower or the loan officer not confirming the application? I can tell you from an auditor standpoint, what I'm starting to experience is lenders getting upset. They're basically coming to the conclusion, at least the auditors are, a licensed loan officer has a fiduciary responsibility to go over their applications before they submit them. If not, it will and can appear that someone's trying to attempt fraud and or to pull a fast one. And believe me, these are all 100% avoidable. Your job, in my opinion, as an awesome loan originator is to go through and get rid of the 100% avoidable items known as red flags. It's only going to take you a couple minutes to have a conversation. You should be having a conversation with your borrowers. I don't know of a hands-off loan anymore. I talk to every one of my borrowers to get to know them, to have a conversation. I personally talk to my people normally before they come in. Hey, so-and-so referred me. We're looking to make an offer on a house. Cool. Let me just start asking a couple questions because boom, I've been doing it too long. I know the red flag questions. Hey, my wife's not going to be on the loan with me. And we're going to keep the departing residence. We're going to make it into a rental property. Okay. I'm just going to point blank ask you, are you and your wife having any problems that I need to be aware of? Are you getting divorced? Because that could be looked on. Why isn't your wife wanting to go on the transaction? Just for the record, because an underwriter might ask me that question. Right? Are you starting to pick up on the nuances in your conversations with people when you put loans together? On my applications, I do not submit applications with more than what I need to get a loan. I don't think it's anybody's business that my borrower has $1 million in the bank when they only need $50,000 to do their transaction. Right? Now, people can fight me on, oh, no, you got to paint a better picture. I'm like, no, you don't. If you got the income, you got the credit score, you got the down payment based on the LTV, it's a done deal. Give them exactly what they're asking for. At least in the broker world, that's how we do it. Your DU, your LP, whatever your VA, FHA, USDA approvals are, that is what you give. If you choose to give more, then anything an underwriter sees cannot be unseen. Maybe you need to hear that. Oh gosh, we always turn in 3 months bank statements. Why? If the approval asks for 1 month, all pages, give them 1 month. Right? I don't understand the audits. Sometimes I'm thinking, wow, they submitted 3 months bank statements, and on the third month, which was 3 months ago, 90 days ago, which wasn't needed, hey, there's some weird stuff on there. And guess what? We're going to spend 2 weeks going down a rabbit hole because nobody's reviewing the information. Now, get mad at me all you want. 34 years in, I talk to auditors all day long, 520 loan officers. We're doing 600 loans a month. I talk to auditors all day long, and I have to come up with what's called intent. Did somebody intentionally try to defraud on this loan? Well, it's very, very hard to prove intent one way or the other. But when it's so obvious that there's something wrong here, borrower works for his wife, just got a raise for $5,000 from $1,000 a month, works for an employer, not a family, not self-employed. And then we get a letter from the employer, and guess who it's from? The wife. And you're thinking, what did we misunderstand here? It doesn't look right. What was the intentions of that? Now, I do want to say this for the record. 99.9% of the time, it is truly a mistake and or a misunderstanding. And that's one thing I love. But imagine, and I was speaking to United Wholesale Mortgage about this, most of these are 100% avoidable and should have been talked about before the loan was uploaded to the lender. And then this wouldn't even be a conversation. Or an LOX would have been submitted with the loan saying, this is what you're going to see. This is what's going on. And you answer the question before it comes up. When you answer after the fact, it looks possibly like somebody's trying to do something. So this is what I'm trying to talk about. I thought this was so important today from a broker standpoint. We're going into refis. We just dropped 50 basis points. Hey, I get it. Not a lot's happened because the rates are already accounting for something like that. But the next rate cuts are going to start bringing things down. We're going to see if they continue to do what they say they're going to do. We are going into a refi market of some sort, hopefully for the next 4 or 5 years, if you're with me. These are avoidable mistakes. And if you're going to quadruple your loan output and you want to get to double digits, you got to be better. You've got to think about it. Now, this is the difference. Some states don't put that in their licensing. And I use that test with everybody. I believe anybody in the financial industry dealing with customers, money, loans, and also protecting your lenders, we are partners. We work together. We are not enemies. We all have a professional fiduciary responsibility to try and help each other get the strongest loans we can and correct loans. People who are not in a right place to get a loan should not be getting a loan. We have way too many loan options out there. And it's like, oh, you know what? It turns out you don't qualify financially for that. But because it's an investment property, if you can come up with 5% more down, guess what? I can do a DSCR loan and all those problems go away. Nope. I really want that lower rate. That's the only way I'll do it. Okay, let me shove that square peg through that round hole for you and take a chance that we're all going to get in trouble for what? A couple $1,000s? I know for a fact right now because I have a loan officer that's come to my company, and 4 years ago, a borrower committed fraud. They figured it out and the deal died because they caught it early. 4 years later, they're now, the licensing for that state is finally doing an investigation of who? The loan officer, the broker. They want to make sure after all these years that who gave you the documents on those bank statements that were fraudulent? Prove to us that they came from the borrower and that you didn't fabricate them. I just said something. I hope you guys heard what I said. 4 years old, they're asking for proof of an email because that's how they supposedly received them. At Expert Home Lending, we hold on to emails for 7 years. It's overkill a little bit for most states, but guess what? Auditors ask for emails. If you use your own email, you better be backing up those emails. You're not supposed to delete emails that pertain to your loans because guess what? They can be asked for. And if you say, oh, I delete them all the time. Okay, well, you might have just deleted something that proves that you were not intentionally trying to defraud a lender. Think about that. I'm not worried about you protecting the borrower. The borrowers can protect themselves. You need to protect yourself. We as a company protect ourselves. We try and do things overkill, but we also push the limits. Let's be honest. Not everybody fits into that square box, right? I push guidelines all the time, but I don't commit fraud. That's something different. I don't jack people's tax returns because I have special Adobe Acrobat programs that allow me to fabricate anything under the sun. People have gotten good at fraud, but the lenders are better. I can tell you that United Wholesale Mortgage has software and applications that they can get access to. If they think any one thing is wrong on that bank statement, they have software that they can reach out directly to that bank and compare. I've seen past addresses pulled up where they pick up, the borrower closed 2 homes on the same day and didn't disclose the second one, how is there no inquiry on the credit if they did it through another company because they couldn't have used the same credit report? Weird stuff, but people do it every day. Look, my name is Rich Hanlin. This is Mortgage Ballers. We talk about things that are right now that you need to hear before we take off on a rocket ship and before you start going 100 miles an hour. Your loan applications are your responsibility. You should not submit a loan application and import it to a lender and get running until you have verified and had a conversation with your borrowers. As I know the borrower works for Google. Why would I ask them if they're self-employed? I didn't ask them if they were self-employed at Google. I asked them if they were self-employed. How many people do you know have a side gig? Think about it. And then all of a sudden you shoot over the tax returns and guess what? You see Schedule C. Maybe you see a corporation income coming in through a Schedule E. All of a sudden you got a K1, all because you assumed that they only had Google, and maybe it's not a big deal. Maybe the income's not needed. But you just disclose something to an underwriter who can't unsee what they've seen, right? So we need to be better. Not just better, we need to be the best. It is our fiduciary responsibility on behalf of our clients and yourself, your integrity, that you want to be here in this industry, that when the refis take off, you could have incredible income and life-changing experience. Don't blow it over the stupid stuff, right? My name is Rich Hanlin. This is Mortgage Ballers. And what do we say every time when we check out? We say it, stay thirsty, my friends.